DataDog runs an observability business for apps and websites worldwide, and that's becoming increasingly important, right? Businesses want to know if their apps and websites are running properly, because if they're not, they can miss out on millions, if not billions, in revenue in some cases. But what about for investors? Should they buy DataDog stock at current prices? That's the question I'm going to answer in this video. Looking at this business revenue growth, its cash flow growth, and then comparing that against the valuations based on two different valuation metrics, the forward price to earnings metric and my discounted cash flow valuation for DataDog stock. So let's get started. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. So revenue growth has trended around 20% for DataDog over the last several years, 2.5 billion in trailing 12-month revenue, and that's up from around 700 million in 2020. The company's business has grown by 3x, and most of that growth was in the earlier part of the previous 5 years. The later part of the last 5 years, revenue growth has slowed down slightly. Overall, longer term, the total addressable market for the products and services that DataDog currently sells is not that large. It's not like a massive market opportunity. And so that could play a factor in a couple of ways. Number one, the opportunity, the trend line growth could be not as long lasting as investors may like. But on the other hand, it could reduce competition. Typically, you don't see as much competition in markets that have smaller size. Big tech companies, they're not going to put energy and effort into a market that doesn't have large potential. And then you don't get as many new entrants into markets that don't have large potential either, because they have a harder time getting investors to back them up with capital. And so you get a kind of a pros and cons situation with these companies that have a smaller market opportunity than some of the other companies that operate in bigger industries like advertising or home improvement or travel, right? Those are trillion-dollar markets. The market for DataDog is not that large. So you got to keep that in mind when you're evaluating this business. DataDog has done an excellent job in boosting the cash flow per dollar of sales. The CFO to sales ratio is up to 33% in the trailing 12 months, and that's up from around 9% in 2020. So they've more than tripled the percentage of cash flow that's generated from each dollar of sales. And this is clear evidence of the company's economies and scale. As it adds incremental customers, it doesn't cost the company very much money to add that next customer, whether it be marketing dollars or cost of goods sold or sales personnel. It doesn't cost the company very much. And so as it has grown, the percentage of that next sale that turns into cash flow is growing. And that's a good sign for investors. And you're seeing that here. The company is now sustainably cash flow positive. I don't think it will ever need to go back to investors to ask for any capital. It could do so opportunistically if it wants to. The balance sheet is in solid shape. It doesn't have too much debt compared to the cash balance and compared to the cash generating ability of the business. So all that checks the marks for an investor in what you would like to see from a business in this stage of growth. Speaking of growth, the analysts on Wall Street that are following DataDog stock, they expect the company's free cash flow to grow from 740 million in 2024 all the way up to 2.12 billion in 2028. So roughly tripling of its free cash flow between 2024 and 2028, which is an excellent rate of growth for DataDog. So now let's look at valuation, starting with the forward price to earnings ratio. DataDog is trading at a forward PE of 56.5, which is about twice the price of the average stock in the S&P 500. A little more than twice the price of the average stock in the S&P 500. But you are getting much better growth with DataDog, both in terms of revenue, profit, and cash flow, than you are getting with the average stock in the S&P 500. You're also getting a business model that's demonstrated economies in scale. You're also getting a business that's already generating strong cash flow from operations to sales, stronger than some of the largest companies in the world. So you're getting all of that. But the downside is you're getting a business that has smaller upside. You're getting a business that's operating in a market that's not expected to be as large as some of the larger markets in the world. So another way I like to look at valuation is by doing a discounted cash flow model. And I've done that with DataDog, and my intrinsic value per share came to be $130 for DataDog. And I did this valuation on January 13th. The current market price is $139. So the market price compared to my intrinsic value would suggest that this stock is fairly priced based on the DCF. Based on the forward PE, I would also say uh, fairly priced or a little bit overvalued. And I would say the same with the DCF, right? Because I include a margin of safety, that's why I'm not saying it's overpriced here, because the market price is $9 higher than the intrinsic value. But if I include my margin of safety, and it's more like fairly valued. So looking at both, you can say it's between fairly valued and slightly overvalued for DataDog stock. So what does that mean for investors? Should they buy, hold, or sell DataDog stock? I have it rated as a hold. And it's because of the factors that I discussed, the valuation, most notably, because the business itself, it's a solid business. If I could get this business at a lower price, then it would be really attractive, because it has a lot of strong characteristics and it looks like a business I would want to own. But what price would I want to own Datadog stock? Not at $139, not even at $129. The price I would start to consider Datadog's stock would be probably around $115 and below. Between $115 and $100. $100 would be a great price. I don't think you'll get that. That would be a 40% discount to the current price. I don't think there will be that kind of a dip, but if there is, that would be an opportunity if everything else remains the same and you're just getting the stock at a lower price. But around 115 would be a good entry price for Datadog stock, in my opinion. At 139, it's a little bit too high for me, so I have it just rated as a hold. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock. And this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.